Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good afternoon to everybody. I hope everybody is doing well. Welcome back to the Fintech Conference 2021. I will be moderating this afternoon session on Beginner's Guide to Sharia Compliant Investing. It is indeed a pleasure to have our esteemed panelists from the different parts of the world with us today. Sharia compliant products have proven to be viable alternative to conventional products. Growing awareness of and demand for investing in accordance with Sharia principle have been the catalyst for the development and growth of a wide range of products offered in the market. Sharia compliant products also represent a class of investment products which may appeal to those looking for socially responsible or ethical investment, as this product must comply with strict Sharia rules that have religious as well as ethical underpinnings. This panel session aims to tackle issues in education and awareness among the masses regarding Sharia compliant investing, in particular to debunk common myths and misconception about Sharia compliant investment, and also to help our beginners navigate through the world of Islamic investments. In addition, we seek to explore insights from speakers from their own experiences in navigating Islamic capital markets to provide their clients and customers with competitive returns while complying with the Sharia principle. With this as the backdrop to the discussion, let us now look forward to what would be insightful views from our esteemed panelists today. Before we start, I would like to introduce them briefly. First, we have Mr. Ibrahim Khan, who is co-founder of Islamic Fintech Guru. Islamic Fintech Guru is a hub that helps Muslims with their investment as well as personal finance journey. Second, we have Mr. Samin Abidi, the Chief Investment Officer of Wahid Invest. Samin started at Wahid Invest in 2018 as a portfolio manager and has recently been named as Chief Investment Officer. During his tenure, Samin has managed all global client portfolios as well as listed the first Sharia compliant equity in the US. And finally, we have Mr. Najmuddin Muhammad Lutfi, Chief Executive Officer as well as Executive Director of BIMB Investment Management Berhad. Mr. Najmuddin has been the CEO since 2015, and he has repositioned BIMB Investment as a leading Sharia environmental, social, and governance asset management house in Malaysia, currently managing about 1 billion ringgit of ESG asset under management. As this session is supposed to be interactive session, I would like to invite the audience to actually pose questions that you may have to our panelists as and when you have that question. With that, I wish to start the session by inviting each panelist to give a brief introduction to the audience of the main principle of Islamic investment based on Sharia. What makes something Sharia compliant? Perhaps I could start off with Mr. Ibrahim Khan, please.
Many thanks, Azad. It's an absolute pleasure to be here. Yeah, I think when you think about Islamic fintech and Sharia compliance, it's really important to keep both of those things in mind. So it's the Islamic bit, but also the investment bit. And I think when it comes to Islam, this word Islamic and what you mean by that, I think you've got the substantive, but then you also have the spiritual element. So substantively, we need to make sure that there's no interest. There's no gharar, there's no maisir, there's no uncertainty, there's no gambling going on. And also you need to make sure that the contracts are in a way that they don't have other technical issues with it. But I think it goes further than that. And I think when Muslims invest, they should now be holding themselves to a higher bar and demanding more, because it's no good just ticking a box and having the letter of the law followed. I think the spirit of the law is really important as well, because Islamic finance isn't just a dead rule book. It's a rule book with a certain purpose in mind. And you think about the maqasid, the Sharia, and you think about the goal that there is at the end of it. So I think Muslims should also think about how the investment has impact, and does it does it really address the core issue that, the prohibition of interest or the prohibition of uncertainty or gambling is trying to address? So that's how I would probably think about it.
Okay, so it's just not basically on the Shariah itself, but also in terms of the overall objective of investing, in terms of doing good to the society as well. Perhaps I could invite Mr. Samin to actually provide your views.
Assalamu alaikum, everybody, and a great honor and pleasure to be on the panel with esteemed people such as yourselves. So Jazakallah khair. When we think about Sharia compliant finance, I think it's often it's quite a wide banner that encompasses many different things. And on the investment banking side, you can talk about structuring. On the investment management side, you could talk about the underlying securities you're holding. And so I would break it up, as Brother Ibrahim mentioned, into operationally Sharia compliant, in that your contracts and your dealings are transparent, they're clear, they adhere to the rule of law and the spirit of the law. A lot of these rules, we get caught up in sort of the overt rules, but they're not rules for the sake of rules. They're intended to serve a purpose, and there's a spirit behind each of the rules. And so, we could talk about each one of the buckets, but the ones that are most relevant to myself, I think most commonly deal with equities, right, or stocks. And so very simply, a business that I cannot run in real life, I should not have ownership of in my portfolio, right? Revenue generated from sources in which I cannot necessarily open up a store and sell alcohol or have a casino, I should by extension not own securities from which most of the revenues are derived from such activities. It's a very analogous logical extension of that. So just to reiterate, I would say that the dealings and the operations are Sharia compliant insofar as they deal with underlying securities, and we're talking about stocks and companies, that those two are Sharia compliant in that I am not benefiting from businesses that I cannot partake in the real world, quote unquote. That's my view of Sharia compliance, just very briefly.
Yeah, thank you very much. I guess there are prohibitions which are clearly stated in the Quran and Sunnah, but there are also other matters which are not clearly stated. I guess at the end of the day, we will have to rely on the Shara advisor to actually, or the Shara scholar to actually provide those resolutions pertaining to investment in those matters. Perhaps I would like to invite Najmuddin to actually give your views as well in terms of what makes an investment Shara compliant.
Yes, I think the panelists have, shared. I agree with the panelists. I mean, the definition of Sharia investment or Sharia in general. I guess for all of us, we understand that there are a set of rules, the Sharia law and the Islamic principles that we have to abide. But of course, Samin and Ibrahim also shared about the, just also beyond that, along the line of Markas and Sharia, for example. But I think for us, particularly if you're a fund management, of course, there are processes that we have to follow. And there's also that check and balance to make sure that we are also Sharia compliance. Of course, there are a set of rules. We have the SC's rules. We also have the IOF rules. In our case, we always have the independent checks where we have a Sharia advisors, independent scholars, that we can deliberate and discuss to make sure that the portfolio that we're constructing are Sharia compliant. I guess, and of course, we have seen how Sharia has manifested in many forms, and we're seeing, many choices now for investors or anyone to be able to participate in Islamic finance. That's how I see it.
Okay, thank you very much. I would like to pose the question to Ibrahim. I guess you have undertaken a lot of education as well as awareness program. What are the biggest challenges in educating the public about Sharia compliant investment? What are the common myths and misconception about Sharia compliant investment, and what approach is taken to debunk them? I mean, surely there will be a lot of questions asked in terms of, Sharia compliant investment, and also there are misunderstanding and misconception. How do you address all those things, Ibrahim? I would like to get your views on that.
Yeah, absolutely. So I think there's a bunch of different things. You know, Muslim or not, when you're dealing with financial products, they're complicated things, and most people don't really know how they work. You know, when you say the words investment, ETF, derivative, cryptocurrency, you know, these are things that, you know, even sometimes, you know, some of us who are in the industry don't necessarily know what they mean exactly, and you get really complicated versions of them. And so Muslims are no different. So you need to drill into that. Like, what exactly is that product that you're talking about? But then after that, for Muslims, there's an additional layer of, okay, now I know what this product is. Is this halal or not? Is this actually allowed for me to invest in or not? And of course, there's a diversity of views within Islamic law as well. So sometimes, you know, people have different opinions on whether or not something is Sharia compliant or not. So it's important to educate Muslims around the diversity of views and also the reasoning, at least at a high level, behind each of those views. Because I don't think Muslim consumers are, you know, they're not stupid. They know what they want, and they would like a little bit of context rather than, you know, I think the era of saying to them, this is halal, this is haram, and that's it, you should just listen to us. I think that's gone. I think there needs to be a bit more, you know, light shed on things. Then the second big area that you get is, now that I know that this thing is halal, what is actually out there, you know, for me to invest in, and how does this compare against other options? And obviously this is one of the key things that we do at Islamic Finance Guru, which is, you know, the whole comparison aspect between the different halal options out there. And then I think, you know, people actually really want to know how a specific product works. Like, you know, for example, Wahid is on here. You know, there's Wahid Invest is relatively speaking not a complicated product, right? It's, you know, you're investing in a robo-advisory product, and you're investing in stocks and shares. But even there, people have really interesting and specific questions. So even a relatively simple product can have a vast number of, you know, particularities and peculiarities that people want to dive into. So then you go into the specifics of each product as well. So I'd say that's probably, you know, at a really high level, that's a kind of a drill down of the, you know, the level of questions that people like to ask.
So basically, you're saying you need to educate the public about the product itself first, for them to actually understand the product before they actually invest, then only educate them on the Shara aspect as well, what makes the product Shara compliant or otherwise.
Exactly.
I would like to move on to Najmuddin in terms of navigating through investment.
Yeah.
What should beginners be looking out for when investing for the first time? You know, is there a strategy to it? What are the key considerations? I mean, for example, in terms of the asset class diversification, liquidity, fees that investors need to take into account before they start.
Yeah, I mean, I guess the basic investing is, firstly, you actually have additional funds, you know, to invest. I mean, the word invest also means that you are taking risk, you know, a bit of risk, of a lot of risk. So you need to establish that, and of course, then, you know, what are your goals? You know, are you planning to invest for the long term, you know, for retirement, for your children, you know, for education, yeah. So whether it's a short term, whether it's a long term, yeah. But of course, you know, for us, we always advocate, you know, long-term investing, you know, and depending on your age and your goals, yeah. And there's also different asset class with different risk-return profile. So there are many things that you would need to consider. But of course, now with the age of technology, you know, you have robo-advisors, you know, there's a lot of education. I think there's a lot of information out there that you can get. But of course, any investment, you need to make sure that you read the offer document. It could be a prospectus, it could be an info memo, you know, that will spell out the risk of the investment. so those are the things that you might want to consider. And of course, there are fees involved. If you want to get an advisory, you expect someone to advise you. You have a consultant, so a relationship managers. It will come with the fees because you're getting that advice. But if you don't want the fees, then of course you can go to a digital platform like robo-advisories. But of course then you have to do it yourself. So I think now there's so many options out there. But I think what's important is you have the additional funds to invest, and what kind of risk that your risk appetite and your goals, and then from there, of course, then you have to read the offer documents.
It can be quite intimidating as well for first-time investor to actually read the offering documents. They contain legal jargons and sometimes they are very thick. How would you advise them? I mean, I'm sure they don't know what to look for, where to look for. So,
well, basic fundamental is if you are engaging with a provider, it has to be a licensed provider. I guess for Malaysia, you can go to SC website, as a start, and you always want some form of indication this is a licensed entity, whether it's by the Swiss Commission or is it by the central bank. You want to have that assurance. Yeah. And then, of course, I think for most of the retail investment products, whether it's conventional, whether it's Sharia, the prospectus is required to be written in layman terms, and most of them you don't find much jargon, like before. So yes, I mean, I think for a start, you just need to talk to someone who have some experience. But I guess the basic foundation, you have to engage with someone with the license.
Thank you very much. I would like to touch on the issue of fintech, since we are at the fintech conference. Perhaps I would like to pose this question to Sami in relation to fintech. Over the years, we have seen more and more Islamic fintech solutions, particularly the robo-advisory scenes, which I think Wahid is one of them, which has opened doors for retail investors to participate in the capital market. How much has this really impacted the landscape of Islamic capital market, and how will this influence the growth of Islamic finance industry in the future?
It's a great question. I think we might initially view it as unique to Islamic finance in our industry, but I think you've seen the Robinhood IPO not too long ago. You've seen this democratization of investment and the accessibility being made available to not just institutional wealth and ultra high net worth, but really being available to anybody, right? And so the same way you see folks able to invest in Robinhood, Vanguard, whatever, it's in the same spirit in that you shouldn't need $1 million to have access to efficient, diversified products, and really the products that work the best, particularly in the investment space, don't have to be the most sophisticated, right? I mean, obviously, as you get to the upper echelons, you have private equity, venture capital, you have sovereign wealth and institutional funds investing in alternatives as a vast majority of their allocation. But if you look at the proliferation of Vanguard and BlackRock and State Street, most of what they offer are in target date, very simple vanilla asset allocations between equity and fixed income, depending on how close or far you are from retirement. And so for us, not only did we see that the conventional banks had not really catered to the Muslim world en masse, you might have had a JP Morgan office in Dubai, you might have had a Citibank office elsewhere, but you really didn't see this calibration to the Muslim world as a whole. And for us, it was, well, we don't necessarily just want to create a turnkey solution to the Muslim world, but really this should be something that's available to a student, a laborer, lower income, middle income, or upper income and affluent as well. It's the same product. It's sort of as efficient, and your savings or your wealth bracket shouldn't really impact your access. And the minute you give people access to the financial markets, I mean, it is one of the most powerful compounding forms of wealth generation and generational wealth transfer. Here in the United States, a lot of the Islamic institutions are relatively nascent, and we have fundraising rounds and we have a spend down model. Whereas, I've managed endowments foundations for conventional clients, and their financial sustainability is something to be marveled at, in that their returns will generate enough to cover salaries, philanthropy, operations, and their fundraising is just the cherry on top. And so, particularly in areas like the US and the West, we're really struggling to kind of catch up a little bit, but I think we're heading in the right direction. And we're hoping things like this, help people across all strata and ultimately institutions. When a Muslim generates growth in their portfolio, that money goes to Muslim businesses, halal restaurants, masajid, philanthropy. There's an economic multiplier effect that's really underappreciated. And so every dollar that's generated in our community goes into it multiple. And so I think, it's not only an access thing, but it's the growth and formation of our institutions in the West, and hopefully the financial sustainability of our institutions in the East.
That's good to know. I think Wahid has made it easier for the younger generation to actually invest. We see Wahid being used by university students, even for them to actually invest. And sometimes I do get referrals, from people that I know as well to invest in Wahid. I also would like to ask Najmuddin, BNB Invest has also embraced Fintech in its portfolio management, and in November 2015 launched the first machine learning and global Shara ESG equity fund in Malaysia. What is the participation demographic, and whether or not the numbers support going digital or going Fintech? Is it worth the effort?
Well, firstly, when we launched the fund back in 2015, we think that it's the first ESG fund. I think actually the machine learning inside the portfolio construction, it's really on the ESG portion and also the stock selection. There is an AI sort of signals being used to manage the risk of the portfolio and also to decide on the stocks. So and now the fund is the largest in Malaysia. It's the largest global Sharia equity fund, and it's because of the very disciplined investment process. So the performance has been quite consistent. It also had income distribution features, and it started as a wholesale fund. Then we changed it to a retail fund. So the demographic, it's very diverse. We have high net worth individuals. We have institutions. We have the retail investors, and it's also available in our app called the Best app. And you can actually invest in the fund, minimum 10 ringgit or just $2. And so from there on, we actually been offering a wide range of Sharia ESG funds since 2015. I think we've done about 8 of them, across asset classes.
Okay, thank you very much. I would like to touch upon the issue on values and return. I'm sure this will be on everybody's mind as well. Apart from maintaining a certain set of principles and values, investors say require the investment to give them a healthy return. How has the Islamic investment managed to navigate this criteria to provide their clients with competitive returns against conventional asset while complying with Shara principle? Perhaps I can open this question to all the panelists to actually provide their views on this question. Can start off with Ibrahim.
Yeah, sure. I mean, it's a really interesting question. I actually think that if you look at like I said, over the last decade in particular, Islamic investments have often outperformed mainstream investments, and that's probably due to a mixture of reasons. The first and primary reason is because we've had a massive bull market. The second is, those Islamic investments are they incline more towards technology, and technology has been huge over the last decade. And then I think the third is that because of the low debt requirements, you often end up steering clear of what in retrospect were the more risky end of the spectrum. So, Islamic investments have been protected as a result of that as well. And I think and I think we should demand from our Islamic investments that they are either on par, if not better than, any mainstream investment, because that should be the bar that we set ourselves. It shouldn't be something that means that Muslims end up getting worse solutions or options than the mainstream. We should aspire to definitely be at the mainstream, if not further than that. And I think this also goes, I guess, across the board, not just in equities, but in all classes. So I think stocks and shares, Wahid Invest has done a fantastic job, and others have done a great job in opening that up, with BIMB as well in Malaysia. I think more work needs to be done in other areas. So particularly, I'm thinking the alternative asset space, because especially now in this next decade, where we're moving into potentially a bear cycle where markets stabilize somewhat, people are looking for returns, and a lot of the returns will be coming from the alternatives market. And I think that's where the Muslim fintech community needs to increase their visibility and performance. Obviously, we have an angel syndicate, IFG.VC, where we invest in early stage startups, which is a regulated UK entity. And we've done about, I think, 35 deals now. So, there are positive signs. Ethis in Malaysia and Indonesia is doing great work. Wahid have brought out, or a subsidiary of Wahid have come onto the scene called Maidan, which does, focused in this space as well. So there are very welcome signs, but I think this is an area that's still a little bit embryonic, and we should, try and progress that over the next decade.
Okay, thank you. Samir, from your perspective?
Yeah, no, I think there was once the thought that in order to invest in line with faith-based or ethically based values, that you would have to pay some sort of premium versus the conventional market, and it didn't just extend to Islamic investing; it extended to any faith-based or ESG investing. The joke on the street was always that you'd be paying higher fees and you'd have lower returns, but you felt good about it. And I don't think that's really the case anymore. I think cycles come and go. You can argue in 09, 08 that we didn't have financials, and that helped us. In the last decade, that we have an overconcentration in tech and healthcare, and that helped us. In a yield curve steepening environment, we don't have financials, so that hurts us. These things ebb and flow. I think to say categorically it'll be better, not always, but I think what we promise, or what we should aspire to, is at a minimum market returns, right? Market returns are, and with the understanding that, within 2-3 standard deviations, most funds can't give you market returns. If you can get market returns, then you're in a good place. The market might stagnate. In conventional spaces, people gravitate towards yield and carry product in this environment, as well as alternatives. But I think that the pragmatic side of me says that, a lot of the guidelines in the space have done a good job in terms of not talking in moral absolutism. They don't say, well, you've received $1 of impermissible interest income, which every multinational that has a savings account will have some yield. But we've done a good job in talking about degrees of Sharia compliance and setting thresholds for ourselves. As such, we've allowed ourselves the ability to kind of get exposure in a way that doesn't penalize companies that might otherwise be okay. And so that's been one thing that's really proliferated the Islamic investing landscape. And on the Sukuk side, any outperformance you see on fixed income is largely because we have a smaller market and technicals are in our favor in that market. So even if conventional credit sells off, there's such a high demand for Sukuk because they're so scarce that they tend to hold in better. And so we do have more growthy sectors, as Brother Ibrahim mentioned, tech and healthcare. But there is also, because of the leverage parameters, you do have kind of a balance sheet quality bias. So it'd be a bit of a stretch to call Islamic finance strategies smart beta, but they do help you and you get sort of the jump on the upside with more growthy sectors. But you do get a bit of downside protection insofar as is driven by debt. And so not having massively leveraged companies insofar as, you know, the next crisis or whatever crisis is debt driven, considering the debt is sort of multiplied to the tune of, you know, 5 to 10 times in certain markets. The companies we invest in aren't really culprits in that. And so, you know, when you talk about competing with the regular markets, it's keeping up with the upside, but sometimes downside protection can be just as valuable when you're talking about long-term compounding over 5, 10, 15, 20 years. If you can protect someone on the downside and protecting with the balance sheet bias here, you can really, you know, limit how much you lose on a drawdown, and that should help you sort of compounding just mathematically over the long run. So we do need more offerings. We do need more diversification. Sharp and information and volatility characteristics should benefit from those offerings. But insofar as that we could keep up with the broader market and help a little bit on the downside as well, I think that'd be tremendously additive.
Thank you. Najmuddin?
I mean, we have about almost 30 years of experience, and we have, you know, wide range of products. I mean, if the customer asks us, you know, do you have a product that can deliver 20% return? Do you have a product that can deliver 10% return? Do you have a product that can deliver 5% return? Do you have a product that delivers 100% return? The answer is yes to all. And we have experienced it. I mean, we had one fund that delivered 120% 1 year. Yeah. So the question is really is, you know, what is the investment horizon of the investor? Yeah. I mean, and normally the conversation is centered around really the timing. You know, people always like to compare. I mean, always like to know what's your 1 year return. You know, that's the normal conversation that you have with many investors. You know, 1 year return, because people are so used to the, you know, our, you know, fixed deposit 1 year. You know, our annual dividend from, you know, from various entities. But I guess the conversation is, you know, for Sharia compliant, you know, if you're looking at, you know, 8-10% per annum for the next 5 years, yes, there is such product. And if you look at the underlying, you know, we have equities, we have sukuk, we have money market. You know, now we're also looking at alternatives. So there's some various asset class that we be able to generate the that match the risk return objective of clients or investors. So I guess now, I think right now, I guess the big conversation is on sustainability and ESG, which I think, you know, Sharia fit nicely. And I think it opens up, you know, better profiling for Sharia. And I feel like for us, you know, we've integrated Sharia in ESG. And I think this is the, you know, Sharia 2.0 moving forward. I mean, the fact that, you know, we also look, you know, be able to make it Wakaf more mainstream. I think, you know, when the SC introduced the Wakaf guideline last year, I think that provide clarity to the intermediaries. So we'll be able to launch that. I mean, we have, so when we have conversation on Sharia and sustainability, now we can have much richer and deeper and more meaningful conversation when it comes to Sharia. I mean, look at Wakaf, for example, you know, what it does on social finance. You know, we were able to then support the social development, you know, and for example, like our Wakaf fund, the distribution from the Wakaf actually goes to, you know, empower community, you know, build healthcare, build, you know, dialysis center, you know, build boats for fishermen in the East Coast, you know, support some disaster relief. So, I mean, this is a great example of how we, you know, I guess, amplify Sharia investing, and, you know, how we actually then really connects with Makassid Sharia.
Okay, thank you very much. Ibrahim, you touched earlier as part of your awareness and education program about the different Sharia interpretations. You know, has that been, you know, how do you convince people on the different Sharia interpretation? I think they may have question in terms of, you know, one Sharia scholar say it's compliant, another Sharia scholar say it's not compliant, and, you know, it may confuse, you know, beginners? How do you address that?
Yeah, good question. I think there's a few different things here. The first is, different people are different. So, there are certain people who really would just quite like to see an official stamp of approval from a reputable scholar. And I think most people would like to see that, but for some, it's not enough. They'd like to go a bit further. But I think that's a good starting point. The second thing to add to that, I think, would be, education around how the product actually works and understanding, the key frequently asked questions that you get and having a really good grasp of that across both the sales team, but also just the entire company as a whole, so that, you can actually very effectively and confidently answer those questions. And then I think potentially, the third thing is, you should accept, I think, and we should all accept that in the 21st century, people have the right to make up their own mind, and they will do so as well, especially with this wonderful thing called the internet. So you can't, the success rate of you convincing someone is not going to be 100%. You're always going to have naysayers in pretty much every kind of area that you can think of in Islamic investing. And I think, it's a case of accepting that and making sure that, where you leave it with those people is that, look, appreciate you have a different perspective. This is our view. This is a very sensible view. You've got, X number of Islamic scholars who agree with this view. But if you want to take an alternative view, that's also fine. And, perhaps these other products might actually be more useful for you.
Okay, thank you. That's great. Najmuddin, you touched a bit earlier on the SRI ESG. Does Sharia compliant equal to SRI ESG?
Well, definitely there's an alignment.
Okay.
There's an alignment with some of the most of the SDG goals. For example, if you look at Maqasid Sharia, one of the things is to eradicate poverty. So I think that is the SDG number 1. So and it also aligned with Wakaf, for example. So there's a lot of alignment when it comes to the SRI and ESG. That's why I think this is a great opportunity to have a conversation on Sharia and how it's aligning with ESG. I think most globally, ESG and sustainability are much more understood. So there is it's much easier now to talk about Sharia because there's so much alignments in terms of values.
Okay. Thank you. I think we have many questions coming in. So perhaps I may want to go through this question. There's a question specifically for Samin. How hard was it, the process of building investment services that cater for all profiles? Imagine loads of groundwork with Muslim communities.
Yeah, no, it's rarely can we say that all Muslims agree on something, right? Alhamdulillah, we have a plurality and a diversity in opinion, both intellectually as well as culturally. So obviously in different jurisdictions, there are different funds available. There's different temperaments. We are a community that I think has typically been bifurcated between cash and private businesses and real estate. Those are the asset classes that we know well. And so moving people away from those, not completely, but more towards public markets is always a challenge, particularly when it pre-necessitates some education on why they should care, then educating them on, well, what is this? And then finally, what products are available. The most interesting examples are, you have someone fill out a suitability questionnaire that squarely puts them in a conservative temperament in terms of their risk appetite. And they see that a conservative portfolio might only return them low single digits. And they say, but I want 20%. But, their suitability is very clearly dictated that they don't have the stomach for it. So, it's reconciling these two things and understanding that, when we say time horizon, risk appetite, behaviors, volatility, we're not merely trying to, dodge the question, or these aren't tropes. It really does dictate how one should be investing. And often that aligns with age and income, but sometimes it doesn't. And so, another thing I think that's common to all Muslim communities is that we do have this propensity towards, I want to double my money immediately. And we do have, WhatsApp groups riddled with, well, I made 50x on this name and that on this crypto. And, we had an adage at JP Morgan where the best people were wrong 50% of the time. And it's better to be lucky than smart, right? So I think it's fighting those preconceived notions that everyone around me is getting rich off these, fringe ideas, and your 8 to 10% just really doesn't look that attractive to me. But, that you can, with 12% returns, which over the last 10 years we've proven the market has given you, you could have doubled your money in 7 years, right? This is the 12-7 rule. So helping people understand that this is a marathon, that hopefully over the course of their lives, that their deposit base and their investing is the right way to go, versus trying to, hit these home runs and these get rich quick schemes, for lack of a better word, is a challenge that's common to all communities. And so that is our unifying factor. But alhamdulillah, we've been able to do it because at the end of the day, people's needs are the same. They want to be able to feed their families, send their kids to school, have a home to live in, have a safety net in case, God forbid, something goes wrong. And so our needs as people are the same, despite whatever cultural sort of paradigms we have to evaluate these options. So alhamdulillah, that's been the best part of the job, is interacting with these different communities and figuring out how to best provide solutions to them.
Okay, thank you very much for that answer. Ibrahim, one question for you. Educating Muslim investors is one thing. How has your experience been in trying to provide awareness for Sharia compliant investment for a wider audience?
Yeah, a really interesting question. I think that I'm very optimistic about this area. I think that there are inherently appealing qualities within Islamic investment that make it interesting for both Muslims and non-Muslims. With venture investing, which is what we do a fair bit at IFG, there isn't really, as long as the deal is Sharia compliant, after that, if it's a quality deal, a non-Muslim or a Muslim will want to go for it regardless of whether or not of their religion. And then I think the track record of making, particularly here in the UK, non-Muslims in the UK use Islamic entities is actually pretty promising. So Gatehouse Bank, Al Rayan Bank are the big Islamic banks, and actually the majority of their customers, surprisingly enough, are non-Muslim, and they invest in their Sharia compliant savings accounts. So it's a non-typical savings account, but I think ultimately, if you're providing them a good return, a better return than the rest of the market, and it's a decent enough product, and it's a decent enough experience, people will go for it. And I suspect that's probably even more the case in places like Malaysia and Indonesia or Pakistan, India, in the Middle East, where it's a Muslim majority. So doing a Muslim thing or a Muslim investing, product isn't actually an unusual thing in any case.
Okay, thank you very much. We have another question. Perhaps I can invite Najmuddin to actually answer the question. Is Islamic investment more costly, especially because there's a lot of backdoor transactions and contracts?
Well, I guess for investment, for mutual funds, as a product, the pricing is the same. Yeah. Equities or fixed income or money market, in our industry here in Malaysia, the pricing is about the same. And the pricing will change depending on the distribution channel, whether it's a digital platform, whether it's through a consultant, whether it's through the banks. But of course, at the underlyings, probably at Sukuk, maybe structuring, depending where it's been structured. Of course, there are some I guess for Malaysia, structuring suku is probably competitive as the bond, but probably other jurisdictions probably slightly more. So I mean, it really depends. It depends on the structure. I mean, if it's financing, probably depending on jurisdictions, but I guess for here in Malaysia, I think it's quite level playing field.
Samin, whether you want to add anything to that question as well?
No, I think operationally, you're often trading the same securities, and so it's if you're trading a U.S. equity, Sharia compliant or non-Sharia compliant, custodians and brokers are sort of agnostic to it. I think the bigger question comes down to scale. When you have billions and trillions under custody and management, you can afford to compress costs because then you are doing trades in such a way and managing money in such a way that gives you economies of scale. So I think theoretically and inshallah, once the assets grow, once sort of these asset managers become more prominent and bigger, then that can be used to leverage pricing power with vendors and providers and compress pricing. It's not that the operational implementation of it is necessarily more costly. It's that there are fixed fees and variable fees. And I think for a lot of Islamic investment funds, they are bearing the brunt of those fixed fees up until they hit break even and profitability, right? And so I think the bigger scale that we can get to, the more I think the end users will benefit from that. So a bit of a nuanced answer to your question.
Okay, thank you very much. There's also another question. Perhaps I open this question to any of the panelists. This is with regard to the SMEs. For SMEs considering to offer Sharia compliant product and services, what are some of the things that they need to consider? Is it easy to be in the Shara business? Any of the panelists would like to answer this question?
I mean, I'm assuming I guess there's two ways to read the question, but maybe I'll run it both ways. The first is that they're saying, I'm an SME and I want to start offering a Islamic financial product of some sort. In other words, I want to become a Islamic financial institution. And then the second way that you could read it is, I'm an SME and I'm looking for Islamic financing, which I suspect is actually the question. On the first one, I think it's like any Islamic financial institution, you need to scope out the market, make sure that it is a fit for your existing customers, work out the regulatory situation with regards to the product that you have in mind, and then also I think doing a commercial analysis about is this actually something that is needed in the market, and how you're going to have an insertion point. I think all of those would be pretty sensible, but I'd focus on starting with your customers because you're already a company, and you already have a ready pool there. When it comes to SME financing in an Islamic way, I think that varies from country to country. I think within the UK, you've got companies like Gurdos, and you've got a few others coming onto the scene as well. So I think that makes it interesting, but I do think that there is still a real dearth in the UK, at least, of proper SME financing and business financing that is Sharia compliant. We get so many queries at IFG about people who want to get access to halal financing, but they just don't have access to it. I think the situation is better in other countries, but perhaps I'll let the other panelists comment on that as well.
Any other panelists would like to comment on that? If not, perhaps we can move to another question. I guess this is perhaps to both Samin as well as Najmuddin. Given the success and profitability of Islamic investment recently, has this then attracted a wave of non-Muslim investor on board?
Well, I mean, I guess for our experience, we see also a significant investors that are non-Muslim, and it didn't happen just recently. It's been some time. I think we've seen this since You know, in the early 2000s or even the 90s, you know, we're seeing participation from non-Muslim, especially at least here in Malaysia, because I think there's a lot of awareness and education in Malaysia on, you know, Sharia compliant investment, and they have seen a, you know, in terms of the risk return of our Sharia compliance. So I would say, you know, we see quite a portion of investors that are coming from non-Muslim.
Yeah, I would echo that. I think that not just with Wahid, but even with players that have been predecessors to us, you know, investors, whether they're agnostic to the values or not, do chase performance. And so insofar as funds do well, you'll see a lot of reverse inquiry through brokerage accounts into those funds. And it's not always Muslims. And frankly, we have clients that are Muslim and not Muslim. I think the interesting thing, and I don't think people have really made this link yet clearly in their minds, is, you know, we're talking about ESG and SRI and Islamic finance, and I think there are different ways to answer the same question, right? How can I get my money and my wealth invested and in line with my values? And you know, if you have to draw a Venn diagram, they're pretty similar. They diverge on the question of banks, and ESG, probably notably so, has more emphasis on environmental emissions and really prioritizes that. But there is a big area of overlap, and so I do think there's a broader appeal. I think sometimes the rhetoric and the jargon can get people lost a little bit. It's very sort of antiquated and, you know, Sharia compliant and investing, and it makes it almost seem very inaccessible. But really, it's a faith-based ethical view of what we deem to be right and wrong in the world, and it's our view of how to align your values with your risk. And so I think maybe there is more we can be doing in terms of having our processes and governance exactly as they are, and not cutting any corners from a Sharia compliant perspective, let's be clear. But in the messaging and PR, realizing that we're not always just talking to Muslims, we're not always just talking to Muslim countries, but ultimately we're talking to people, and those people might ultimately become Muslim one day, or they may not, but ultimately we're providing a service for everybody. And you know, this is how we view the answer to how do I invest ethically, and others might diverge on that, but I do think there is a broader appeal inherently in what we're doing. So maybe we can kind of do a better job of making that more transparent or apparent if we haven't done so already.
Okay, thank you. This is an interesting question. I think perhaps Samin, you may want to address this as well. Will there be major consequences if there is too many fintech using different Shara standard, IOF, central bank for Shara compliant counter? I think Ibrahim has actually touched that a bit on the different Shara interpretation. Perhaps you may want to provide some insights into this question as well.
Will there be any downside? I mean, I think competition ultimately results in sort of ideally more choices of product and thing. You know, I had one of my teachers sort of coin a term called slick fiqh, where people go around shopping for opinions that help rationalize what they're going to do already. So I think insofar as it's a true intellectual conversation and we are providing options and lowering costs for people, it can be a good thing. So long as, you know, the spirit of the Sharia compliance isn't lost. You know, we don't cut any corners, and we try to do things the right way at Wahid. And so there are a lot of, you know, conventional players that don't abide by the same thing. They're just, you know, a customer is a customer. And, you know, I think a lot of the cynicism that stems from our industry has come from what people deem to be a bit of window dressing and stuff like that. But I think insofar as the processes are rigorous, that the traditions have precedent, that are proper ulama, like backing kind of the ideologies, then no. I mean, it might, for the retail user, cause a bit of confusion as to why there's some divergence, but I think more than 90% of it will align. So you'll have some difference on the margin, but I don't anticipate that that's a bad thing if done correctly.
And Jumuddin, do you want to add anything to what Samin has said?
Well, I think I totally agree with Samin. I mean, you know, the more the merrier, I guess. You know, more options, and I think then it will further develop, at least for the Islamic capital market. I think that's what we need. I think we need to have more choices, that also will lead to increase of capabilities and expertise, so I think it's a good thing.
Okay, great. We have about another 5 minutes to go. Perhaps I can invite the panel to actually give 2 minutes conclusion to this session. Perhaps I could start off with Ibrahim.
Yeah, absolutely. I mean, I think this has been really interesting to get a really international perspective on the topics that have been discussed around, particularly Islamic investing, but also more generally investing full stop. And I think for me, the most interesting take-home message is that Islamic fintech is now a force to be reckoned with, and it's no longer by any stretch an embryonic industry. And I feel like in the next decade, we have the potential to essentially become mainstream, to just become another very viable mainstream option. So let's see what happens.
Samir? We can't hear you.
Apologies. I think, like many of my colleagues, many of us have had to get our training in the conventional space. From then we came and applied it to the Sharia compliant space. I think, alhamdulillah, we are in a position where we do have options, and they're not just minimal viable options, but they're quite efficient and quite attractive options. And so I guess the imminent takeaway is that, we no longer have the excuse of, well, we don't have resources, we don't have areas of learning, and we don't have products that cater to our needs. I think we can always get better, we can always evolve, we can always bring more products to the market, but I think we do have something sustainable that can help all of us grow our wealth and generationally over time. And I think, just taking a step back, we are a massive, massive part of the growing demographics from a working age population, from a GDP per capita growth. We do have everything we need in place, and I think the digital evolution has really helped equal the playing field. And so I'm very optimistic about the future. I think that the internet and our phones have really connected us in a way that was difficult to do before. And so, alhamdulillah, let's see what the next few years bring.
Najmuddin?
Yes, I guess for me, the key word is innovations. As long that, we are high-spirited and we, come together like this, we continue to push innovations. So, sorry, you're mute. Isaac.
No, sorry, go ahead, sorry.
Yeah, okay. So, for me, the keyword is innovation. So I think as long that the industry and the regulators, be able to work together and to promote innovations, especially in the Islamic finance space, we will see more proliferations of new products, new services for not just for the Islamic community, but also globally. I think some of the innovations that we're seeing, with digital, with technology, of course, like the equity crowdfunding, like the P2P, so I think this is new areas, and hopefully we'll see more of this.
Okay, thank you very much. With that, ladies and gentlemen, we have reached to the end of our panel discussion. I would like to take this opportunity to once again thank our panelists, Mr. Ibrahim Khan from Islamic Finance Guru, Samir Nabidi from Wahid Invest, as well as Najmuddin Muhammad Kufi from BIMB Securities, BIMB Invest, my apologies. And also, I would like to thank everyone for your participation, and I wish you all a very good evening. Stay safe and take care. Thank you very much.